Now for more on the markets, we cross to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, the local stock market opened in positive territory, up around 0.7%, and it went up as much as 0.9%, with mining counters doing quite well at the beginning of the session, up about 2.5%, although they've receded somewhat, but they're still in positive territory. As you mentioned, Nzinga, the US dollar is firmer, and this is on the back of that the Senate pushing through that tax bill. There's still other processes that have to happen. The Senate and the House of Representatives have to work together to actually push this through to become legislation. But that's been positive for the US dollar, and in turn negative for emerging market currencies. We did see the rand a little bit on the back foot earlier in the session, although it seems to have recovered slightly. And of course, the expectation around that tax bill is that once it becomes legislation, it will mean an injection of a lot of money in the US economy, which could be positive in the sense that they could demand more in terms of exports, imports, pardon me, which would be exports from us and other nations. But the negative, of course, is that they'll get more inflation and higher interest rates, which may force emerging market countries to push up their interest rates as well, which of course is not good for us here in South Africa as we have very lackluster growth. Let's take a look at the indicators. Well, Channel 404 will be concentrating on that KZN ANC conference. And of course, we continue on SABC3 with our markets coverage. And I'm joined now by Bright Kumalo. He's from Vestact. Thank you for joining us, sir.
Lovely to be here, Nompu.
Good stuff. How are global markets responding to this US Senate pushing through the tax bill?
Yeah, I think you've said it already. We saw, a strong dollar, U.S. Treasury yields also going up, and we've seen also the futures market is also in the green. So you can see that the market is taking the news positively.
And then ultimately, I touched on it very briefly, but you're the expert. What's the possible impact for emerging markets?
Well, it depends, because it depends on for example, in South Africa, what countries that operate in the US, because they might be affected by this. And if they do happen to operate there, like mixed telematics, it's going to be good for them, because paying, a tax of 20% as compared to 35% is a positive for that business, because it can reinvest that capital elsewhere in the business to expand the business rather than taking it to the, Uncle Sam.
And from a monetary policy perspective, obviously, more liquidity in the US means possibly more inflation, more interest rates. What does that mean for us?
Well, I haven't really thought about it deeply in terms of, the repercussions. But like you said, if there's no growth in our country and we're trying to keep up with the Joneses there in the US, it's going to be very tough in terms of monetary policy, because increasing interest rates in an environment that's not growing is not good. You're just compounding the problem.
Indeed, indeed. And then it was interesting to see that commodity counters were doing quite well this morning. I don't know how they're doing now, but I know they're still in the positive. Surely it would have been a negative thing that the US dollar was now firmer.
Stronger, yes. So Citibank this morning came out basically saying they're very bullish on all commodities across the board, and they were basically citing the fact that from June to now, commodities index, the Bloomberg Commodities Index, is up about 10%, and that's on tighter supply. People are not just supplying for the sake of supplying. They're watching, and as a result, that has led to a rise in demand, and we've seen that with OPEC, and they're trying their best to keep those prices, that supply stagnant.
Indeed. And then let's take a look at a couple of stocks while we have time. Steinhoff Africa Retail, which is a spin-off of Steinhoff, the original company which has interests in Europe. But now this one, Steinhoff Africa Retail, concentrates on African assets. It came out with their full-year results, operating profit up 25% at 6.1 billion rand, and the company boasting that they managed to substantially cut costs. What do you think of this particular stock?
I think it's going to be an interesting one, especially on the ShopRite front. They're going to have about 51% voting rights in the end, and a big stake of about 31%. And obviously that's in, trying to get the PIC and Christo Visser as the main shareholders there to get more voting rights and, to reshuffle their assets, if you want to call it that. It's an interesting one, but the thing is, what caught my eye in those numbers is that 95% of all of the earnings that they make are all in the SADC region. So there's still lots of potential to go up north in Africa. That's if we strip off the equity accounted stake in ShopRite, because ShopRite is already, they've got their fingerprints everywhere in Africa.
Interesting about ShopRite, it seems to be the main prize for STAR, as they call themselves, Steinhoff Africa Retail.
Yes.
Before they did this spin-off, they wanted ShopRite, they couldn't get it, and then now they've gone through this route of spinning off and still going for ShopRite. Is it all about ShopRite?
Well, you can see, ShopRite is the star here, not Star. So that's why they're pursuing it with such, excitement. You look at the space they operate in retail, LSM 6 going down, and you look at those people, they're still spending even though they don't have money. And what's nice is that ShopRite can keep the prices lower because they're squeezing the fast-moving consumer goods companies. And as far as I know, any company I've worked with, ShopRite has the best negotiators.
And very quickly, Barclays PLC, based in London, they're to sell a further 7% of their stake in Barclays Africa. That will take their stake down to their target, which is just under 15%. From Barclays Africa's perspective, is this a good thing? Because they no longer have to consult with the UK.
Correct. Like I said, it's a natural progression. We were expecting that to happen, and now Barclays can be an independent company again, and there'll be more liquidities for shareholders locally, like the likes of the PIC, to actually get more shares. And in terms of the valuation of the business, it'll be closer to its true value because now there's more shares, readily available to trade. So it's going to be interesting.
All right, we're going to leave it there because we've run out of time. Thank you so much, Mr. Khumalo. Well, that was Bright Khumalo. He's a portfolio manager at Vestact. And after a short break, Nzinga will have more business news for you.